that sound means we are now live here on our YouTube channel, Tackle Trading's Halftime Report, our daily show where we go through the markets a step at a time, take a look at the charts, the news, the information, break it all down, analyze it, give you guys the insight that we have as tackle trading coaches and help you better run your daily routine and have a successful trading day. Welcome out my veterans, halftime crew. If you're coming in and you're a veteran, write in the chat. Make sure you put the official hashtag Team Tackle in there. If you're brand new to our channel, click subscribe, click the bell, come back and join us. We go live whenever the markets are live, 12:30 p.m. Eastern Standard Time. On today's show, we kind of have another light day in the market, a little bit of a doji day happening on the charts. So we're kind of setting up some breakout potential on certain individual companies. A lot of great stock picking that's happening out there. News around vaccines, more rumors around stimulus, more development from Pfizer and those type of things. We'll talk a little bit about that. There's some earnings companies that came out over the last 24 hours. We'll take a look at some of those numbers if they've grabbed our attention. News out of Uber, other companies, but mostly today it is Tuesdays with Noah, and we've got our resident chartist here, one of the best technicians I know here to help us break down the markets one step at a time. And Noah, you know what I did to prepare for the show today? I found some real great charts from the weekend scouting reports, and later in the show, I'm going to have you break them down and kind of talk about entry points and planning and full trade prep if we can. But Tuesdays with Noah, how are you doing, sir? Let's start with you. And on mute.
Hey, for being on mute, I'm pretty awesome for not finding the mute button. I'm doing fantastic this morning. We had a great traders lounge this morning. Lot of good picks and candidates right off the scouting reports. Mm-hmm. I think some of the stocks you're going to highlight we already talked about a little bit, but there's some new ones which I'm excited about. Those charts look pretty darn good. And, this market's showing a little bit more life than it did a few minutes ago. It's, opened up down to the downside, hit off that 9-period moving average, and we're closing right up back near that all-time high. And one of the things I pointed out earlier this morning when we were doing the lounge for the pro members is I talked a little bit about this small rising wedge pattern. Now, this isn't definitive by any stretch of the imaginations, but I see a little rising wedge pattern in here between these highs and kind of these rising lows. And that's just meaning that this is not a lot of momentum out there. And it, poked up to those new highs and just kind of been loitering above that old resistance. Not a lot of energy as of yet, just kind of grinding slowly higher, which is good. I mean, you can make money doing that because it's continuing to give you the higher highs and higher lows. And I particularly like the long shadow on today's candlestick as it came down and hit that 9 and has come right back up. I mean, that to me is a good sign of life for, a quiet day in the market on a Tuesday. I like to see that.
Yeah. Matt, how are you reading the market price action here? First off, how are you doing? First off, I should say pleasantries to begin the show. And then market action, if you can.
I'm doing absolutely fantastic, Jim, here on a random Tuesday, and I'm excited to be with the halftime crew to break down the market activity here today. And I got the same read as Noah. You're approaching 3,700. The market's been in a grind, a slow, methodical grind where, on a daily basis, there's a lot of news around vaccines. Like, for example, today, the first individual in the UK got the COVID vaccine. It looks like this week, these are just reports today. This week, it looks like the Pfizer vaccine is going to be approved through the FDA. So, and get authorization to start using it here in the U.S. for frontline workers. These are all, positive news developments. But the simple reality is we've known this for a very, very long time. Yes. And
I was going to say I saw that news headline this morning, Matt, where the first recipient's name is William Shakespeare. I mean,
you got to be kidding.
Yeah, that guy survived the plague the first time around. He's probably golden.
He's been around.
Yeah, I mean, he's golden. He is that the name of the guy. He's like a 90-year-old dude. His name's William Shakespeare, and he's one of the first recipients.
That is so awesome.
Yes.
And honestly, Noah, we should celebrate this day.
That's a real thing.
No, that's a real thing. I can't think of the lady's name, but there's also the 90-year-old lady was the first woman to receive the vaccine in the UK.
No, it's a wonder. First of all, that's what I saw. Margaret Keenan.
Margaret Keenan. So, and then the dude's name is William Shakespeare.
Yeah, 91 years old. So you have a 9-year-old kid and a 91-year-old grandma. Both got the vaccine
they're both 90-year-olds.
They're both 90-years.
Yeah,
both 90-year-olds.
Yeah.
Okay. Got it. That's so awesome.
Nine at heart, though. Nine at heart, though, Tim.
It is a day to celebrate in so many
day.
different ways. No question about it. I mean, just from a human perspective, what we've dealt with here in 2020, on the halftime report, we've been speculating around the vaccine like every other community has forever, right? About how it's developing, how it's coming. We've got to the point where we knew it was going to happen. It looked great along the science map, but here we are. And two 90-year-olds, William Shakespeare and Margaret Keenan in the UK, are getting vaccinated
Fantastic.
today.
It's absolutely fantastic.
I'd say he looks pretty good, considering.
That's awesome.
Again, we're going to celebrate that as humanity, but is there any new information there?
Market don't care.
Right. So the point is,
market doth not protest too much.
There you go.
Going Shakespeare.
There you go. I like it. But yeah, the market, again, positive development. Love it for humanity. Celebrate it. We see the end in sight. It's positive, and there's literally nothing that has transpired literally in the last 3 months that has changed the timeline that we knew back in May, June for the vaccine. So there's nothing new here, is my point.
No, there's not new information for markets to process. I do see that Pfizer's starting to move a little bit on this news. Pretty incredible. I saw the tweet you put out there, and that was it did reflect.
Well, I didn't.
You retweeted.
Somebody else far more creative and smarter than I did. I just retweeted it, but he said, 2020. Basically, he said, Pfizer's, literally curing the world of a, disease that's killing off humanity. It's up 10% on the year. And I can't even remember what stock. Pick your stock in the tech space, high flyer, stock this year. But X company is shipping X product and they're up 245% year to date.
Right. Chewy's making dog food online and they're up 300% or something like that.
But when you think about it, it's like, we're kind of crazy. And we kind of deserve the ultimate end of all this craziness. But it's interesting when you think about it. But from a short-term perspective in the market, obviously there's nothing here. There's nothing new, nothing to process, nothing to price, nothing to think about. Literally the timeline, guys, you got to think about this for a second. The timeline when we first started talking vaccine and when Trump first initially started putting out Operation Warp Speed. And Operation Warp Speed was that, obviously, it was the program of developing the investment at the federal level. Even though Pfizer didn't participate, Moderna, many others did. Operation Warp Speed was to get that vaccine out there. It was expected to, it was random, crazy, right? But there were people talking about potentially by the end of the year, maybe mid 2021, and even Cody was like, "Man, that is a short timeline for a." Vaccine, which typically takes years and years and years, but they were talking about that. And, even though it was like, well, this is outside the normal time frame, think about all the investment they put into it. So fascinating, awesome. You got to give the Trump administration, you got to give Operation Warp Speed, you got to give Pfizer a lot of credit. But at the end of the day, the timeline for all of this positive development we've had on vaccine in the last month, it's not new information, is my point. It's positive. It's just not new information. It's well known to the market. That's why you're not seeing the market just go crazy, euphoric, just blast out, blow off top. It's like everybody's kind of like me. Fantastic, awesome, great for humanity. Yeah, we've kind of thought this in the market for 6 months, so we're good. We're still just kind of thinking about Christmas here. But from a technical perspective, I kind of like what I'm seeing in the last couple of days here. You have had that slow, methodical grind, right? That grindy market.
No, I'm back on the S&P. Sorry, Matt.
That grindy market Mark was talking about. We've talked about the last few days. You haven't had any true momentum in the market. You have in individual plays in the market, right? You've had good breakouts. You've had, good individual plays, but in the overall broad market, you've had just this grindy, stagnant, just slow, methodical move up to the top side. And then and I've said this many times in the halftime report, because I feel it's the number one support or resistance level and triggering mechanism in the market in 2020 is significant whole numbers. And so the market comes up and finds that 3,700 number, that slow, methodical grind that we saw. What does it do? holds it head at 3,700. Tries to recover yesterday. Where's it come into? 36.96. Comes right back down. What's happening today? Coming right back into that 3,700 number. So you had that slow, methodical grind, but over the last few days, you're now starting to see that high base type form, that traditional high base. The 9 is obviously still, this would not be alpha 9 because you're missing the ultimate component to alpha 9, and that would be increasing momentum. This is that slowing momentum, methodical grind, but you still have that nice little trigger right there at 3,700 starting to develop, which means you get another couple of days of consolidation. You got a real clean trigger above 3,700. So I do see that methodical grind. Certainly agree with what Noah's talking about. Certainly agree with what Mark was talking about last week. But I do think you're now starting to see that 3,700 trigger start to develop here. Mm-hmm. And I think that's a positive sign for traders moving forward.
When we start getting into these grindy type of markets that are riding the 9 EMA, holding the 20 SMA, all that kind of stuff. I mean, the idea of being overbought and overextended, all that kind of thing. I think that newer traders can get a lot of, confused by that type of language, that type of thinking, because Matt, we don't know when this trend is going to end. It can grind like this for another month for all we know. You have to trade what you see in front of you based on what you have. What would you say to somebody who's starting to worry about the reward risk dynamic though? I mean, if it's gone too far, that whole mindset, it's gone way too far in too short a period. I mean, what's your thought process on that?
I would say that was accurate for about 6 days after the election, but that momentum has obviously shifted over the course of the last 3 weeks. I think they're weeks late in that analysis.
Yeah. No, if you can.
By the way, they weren't wrong. That was just that's the slowing momentum you're seeing in the chart. You can easily see it in the chart. You see that initial surge coming post-election where energy's up 24, 25, 30%, industrials, finance. Tim, these are all things we talk about. Literally, we talked about this in detail last week in the halftime report, not in the halftime report, but in the podcast and the halftime report, where we talked about you cannot expect moving into the future the same type of momentum in industrials, energy, basic materials, finance, those areas of the market that were really positive post-election. You cannot continue to expect that same type of momentum. That is not how the markets behave. And so that I saw that same analysis in the market over the last 24 hours, Tim, about the market's a little concerned about overvaluation. It's stretched up over the course. Really, based on what? Based on what form of analysis is the market overstretched too hot in the last 2 weeks? Oh, wait. Somebody give me an indicator in the last 2 weeks where it's completely overstretched, where you're just like, you can't trigger above 3,700.
No, you want to take the challenge? You want to fight the trend here?
I don't particularly feel up to it today. I mean, it's just he's making a pretty solid argument, and I don't know that I'm going to win that argument, but I will point this out.
No, you would lose the argument.
Yeah. So it's better part of valor is discretion right there. This dropping volume is another little thing I've noticed. You're seeing it's just kind of lost a little bit of energy, and so I would say you're anything but overbought. And I like the retest on the 9. And I think above 3,700, you're perfectly viable trigger. Like there's no reason you can't. Now it'd be helpful if there's a little news or information to spark some energy into it, but it's just grinding. And I wouldn't really fight against the grind, and there's clean air up above it. So there's no signs of overbought. Technically it's not overextended. It doesn't give me vertigo when I look at the chart. It's a reasonable entry.
A breakout of 3,700 is there for sure. Go ahead, Matt.
Go back to last December during that methodical, grindy market last December. And you tell me there's anything different last December on volume or analysis than we're seeing right now.
Well, let's see. No, I mean, it's just same thing, kind of grind, little interruption late. Just, everything's grinding perfectly until
then we had the lockdowns
February, March surprise. So that's what I'd be watching out for, is some sort of other, craziness, but the grind is going on just fine.
Mm-hmm. Well, and by the way, you could take this chart back at any year, probably over the last 12 years and during this bull run. And when we get into these upward grindy markets that are bullish, they just stay bullish until they don't. You got to trade it based on what you see in front of you. I'm still bullish, still looking for bullish entry points and still approaching it that way. Noah, can you go through all the indexes for me pretty quick and just kind of look at the Dow, the NASDAQ, the Russell, any relative strength or weakness, anything grabbing your attention?
Yeah, you bet. Let's take a quick look at the Dow. It's right up there near the high, and it's got a nice little green candle today. So kind of looks like a little bit of an engulfing type setup that's happening. It would be nice to see it take out that high, but it just staying above that 9, just kind of almost grinding right up above that 9. It's done a little bit of a retest on the old resistance support zone. And the fact that it's closing right up near the high at the moment leads me to believe that it's going to continue to grind higher. So it looks, I think it's got a little bit more energy than the S&P if you look at that in that light. NASDAQ, I just like that it's closed for 4 or 5 days above this resistance zone now. So it's been closing for a week above that. And it hasn't really gotten any new fresh legs underneath it. But the fact that it's kept closing above the resistance and continue to slowly grind higher, I'd expect that to continue to drift and grind higher. And I think 1,300, by year's end is not that far out there, or 13,000, excuse me. I always truncate data in my head. But big fat number out there, just grinding higher. It may take a little while, but clean air up above it. And the fact that it's just maintained that close above the high is a good sign there. Then the Russell 2000, I think, has got most life. Those small caps. It's had quite a bit of energy, and it's actually been posting new highs with some bigger candles, a little bit more energy, riding harder off of that 9 and popping up, closing up at a new high right now. Mm-hmm. So I like what I'm seeing out of the Russell. It looks pretty.
Matt, one of the other conversations that continues to go on, it's going to happen every day, at least just a quick update on what we know until we get some kind of stimulus deal done or it's off the table. Matt, stimulus continues to move forward from a conversation standpoint. I saw Mitch McConnell talking about how he needs to have protections for the provisions protecting businesses from lawsuits. I mean, these are just talking points. The conversation is happening. I think it's moving forward. What's your read on stimulus and any updates you had from it today?
No, I don't think there's any updates on stimulus. I mean, there's chatter politically, but I don't think that chatter has indicated to me anyways, one way or the other, that stimulus is not going to get done. And so right now with the chatter on stimulus, I just take this as just pure negotiation type chatter. I fully expect a stimulus deal to get done, quite frankly. And we talked about it in the podcast yesterday, but at this point, I personally, I don't think the market fully expects stimulus, by the way. I think the market's a little late to the stimulus conversation, but I do think they're waking up to not the potential, but the fact that this is probably going to get done.
Mm-hmm. Yeah, I think so as well. And that's kind of the way I'm operating. I don't think the market's completely up to speed on it. And I still think the market is going to react to that news if and when it does happen. That's my take on it. Let's take a look at all the commodities if we can.
The market was very surprised last week when a bipartisan Democratic and Republican individuals came together to put that $908 billion stimulus deal together. So yes, they're late to it. And anybody who thinks that stimulus deal is priced in, the market was not even anticipating stimulus until last week.
Is $1 billion or $1 trillion a lot of money?
Not anymore.
I know, right? It's like, I keep hearing that number, 908 billion, 900 billion. I'm like, God, this is one of the biggest bills, fiscal stimulus bills that has ever been proposed. But because of what we dealt with the balance sheet last year, not only the Fed, but with the government, it's like, it is what it is.
Listen, we consumers get caught up in the debt conversation because we should get caught up in the debt conversation. But they don't care about the debt conversation. And they is every Republican and every Democrat and literally every politician in the US, or they would actually do something about that debt conversation. And they would have done something about that debt conversation literally in the last 20 years, because this is the first time in American history we have yet to reset our debt cycle in a market cycle. We've done it now for 3 consecutive cycles. It's not changing. It's the new norm moving forward. And they're going to do it until literally they kill the dollar. That could happen in our lifetime. It may not happen in a lifetime. I'm not going to worry about it anymore. Our job is to buy asset classes.
Yep. Let's take a peek at the dollar while we're just talking about currencies, and it's something that has been devaluing for a while here. Matt, I'm not calling obviously for the big death of the dollar in the short term, but it is under a lot of pressure here and been very, very bearish. What's your read on the dollar?
To call the death of the dollar, you have to call the death of all fiat at this point. And I just don't think, I think that's pie in the sky at this point. But in terms of looking at the dollar specifically, yeah, over the next 10 years, 20 years, we're going to have a race to the bottom. It's just going to be the dollar that's going to be really, really good at it. When you're looking at the dollar here, you have it very, very simply. Overextended, bearish downtrend, overextended, expect consolidation, expect a little bit of retracement. Right now, we're looking at this as a bear flag pattern, still could form that ultimate retracement and still could form that base. We're still early in the pattern, let it develop, but any degree of analysis at this point does lead to more dollar pain.
Mm-hmm. Mm-hmm. Yeah, I don't see any way you could look at that and find a positive light on that. No question about it. A little bear flag or a bear retracement. What is that pattern, Noah? Is that a bear flag or a retracement?
Well, it depends on your time frame. Bear retracement here, drop it down to an hourly time frame, and you're bear flagging it for sure. You got that big drop, and let me get that into 20 days, 1 hour. There's your big drop and bear flag, kind of that little channel back up after the big drop. So yeah, bearish sentiment across the board. And that little rally in there, yeah, just got that nine's looking like it wants to smack it down. The other thing I was thinking about, just kind of looking at the chart, how it kind of came down hard back in July. It then chopped sideways. I'd expect something similar out of this, Matt, because I don't think the dollar's going to die quickly. It's going to die a slow.
No, it's a gut shot that's over decades.
Death.
Yeah,
it's going to be drawn out. So what I would suspect is going to happen is it's going to drop and then oscillate, chop, drop, chop, chop, maybe rally every once in a while.
Although I do think the easiest analysis in the entire market, guys, is bearish downtrend in dollars. You want to be in equities and gold.
Yep. Trade your dollars for something of value.
Yeah, that's exactly what it is.
Bring up
anytime.
Gold. Let's talk about it right now. Matt, yesterday you had a conversation with Pete Thomas. We're going to be releasing that as soon as we can here today, I believe, at some point. Waiting on some, compliance people to get back to us, make sure we can get that podcast out there. But you talked to Pete about gold, and you're talking about the relation to the dollar here. What's your read on gold based on that?
Well, and we did have a great conversation with Pete. And for those of you long-term listeners of the Trading Justice podcast, you know how much we enjoy Pete Thomas and all things Pete brings to the podcast and his analysis on all things precious metals, not just gold. And what I love about Pete, and Pete's now been a friend of the pod down for years and years now, but I love his analysis on all things metals. And, he's had some strong calls in the podcast on palladium and platinum, gold, silver, obviously, but some of the ones I personally enjoy because I love listening to Pete on his precious metal analysis. But some of the things I actually love getting into with Pete is kind of those nitty gritty things you never think about in the precious metals and certain metals that literally only certain individuals can find. But I loved the conversation with Pete on gold and silver yesterday. So definitely we are going to be releasing that podcast here today, just waiting on Zainers to get back from a compliance perspective, but that will be released later on today. And we definitely talked about gold, and Pete's obviously positive on gold. And Pete had me and Pete were getting into a little bit of a detailed conversation on gold, and he was analyzing kind of what is happening in the gold market. And it was something, and this happens every time I talk to Pete, but he brought up something that it just made me think of something. And do you guys remember those couple times during the year in gold where we had that real quick snap back? You don't even want to call it a bullish retracement. You don't want to call it a flag. Those couple days where you just see like real true volatility in the gold market this year. And both times it was because of capitulation on hedge funds. You guys remember those couple times in gold this year?
Yeah, specifically the one that happened recently after the huge run up. We got the big day, but even earlier in the year, Matt.
But there was there was one in March where we were just starting to talk all this stimulus conversation, right?
Yeah, it dove from 1,700 to 1,500.
And it's like, what is going on here, right? Mm-hmm. Gold should not be performing like this when you're literally dealing with a pandemic and you're dealing with all of this stimulus and monetary. And is like, listen, this is hedge funds capitulating to pay down bad investments. They got margin calls in their equity positions, and they had to pay down good investments, i.e. sell those investments to pay down. And Pete was talking about what's happening from a macro perspective in the gold market in the last 3 months, because I was talking to Pete. It's like, Pete, obviously we're looking at the gold right now at 1,800, looking at the 200-day moving average. But in this environment where we're talking all this monetary stimulus, what's going on with gold, Pete? And he's like, Matt, you got to realize there's all these nations out there that have purchased all this gold for years and years and years. Kazakhstan, Russia, China, India. He just starts naming all these nation states, and he says, you got to realize they don't have the potential and the ability that the U.S. has from a monetary perspective, obviously, because the U.S. is the reserve system. Just think about what Europe said this week, right? Europe said, we don't have any more ammunition to throw at this. What did the U.S. said? Hold my beer, watch our ammunition. We got a printer, right? Well, that's because the U.S. is the reserve system. They can go into more debt, they can print more money, they can offset inflation. Every traditional risk you have to a currency perspective is a little bit less with those types of monetary philosophies, when you don't have to take on the ultimate risk of actually carrying the currency because you distribute it to the rest of the world. And he says, so what's happening in the short term in gold is all these countries that are going into all this debt during this terrible, terrible, terrible time in 2020. Well, they got to pay the bill. They got to pay the balance. They got to pay that bill. And how are they going to pay that bill? If Europe can't print any more money, they're 26% reserve status. What do you think Japan can do? They're 1.7% reserve status. What do you think Russia can do? They're 0% reserve status. What do you think China can do? The only reserve status China has, and it's about 2%, is in the SDR. They don't have that economic and monetary ammunition that the U.S. has. So what are they doing? Well, in Pete's mind, they are doing the same thing from a macro perspective that we identified at the hedge fund level early on in March. They are capitulating, selling some of their investments, i.e. gold, to pay down some of the COVID relief bills. And he says that's not going to continue. You want to be in gold, is what was his point. Don't get fooled by the short-term mechanics of what's happening in the gold market. Now, obviously, Pete's a gold guy, he's a precious metal guy and all of that. So, he's obviously a believer in it. But at the end of the day, that really kind of, because I do like top-down analysis. Me and Mark are very similar in that capacity. We like to actually understand the price movement and not just chase price movement. We want to give it some causation. And that, honestly, for the first time, I started thinking about it. I'm like, you might be on something. There might just be some macro level capitulation going on where you absolutely want to be in gold longer term. And so that did give me a little bit of more confidence in the gold analysis, because it finally made some sense to me. But I still think we're a little early here. I think the technicals the last 2 days has kind of broken that retracement. I still think, though, before that ultimate, because Pete is one of those guys, it's like, you should be putting 5% of your earned income in gold, right? That's Pete. So he does it all the time. Pete paid for his kids' college education through precious metals. So that he saves money in precious metals. So he does it all the time. But his point was, you should be looking to scale in here, is what his point was. And so, and that's certainly something I agree with from a fundamental perspective. From a technical perspective, the last 2 days in gold has kind of thrown off that, bearish retracement, come back down, retest that 200-day moving average, which still can happen. Obviously, we know the power of the 50-day moving average, which gold is hitting here today. But I do think the actual trigger to get to re-emerge into gold, to add to a position in gold, would not be on the gold chart. I'm looking at that dollar chart. That dollar chart is the number one chart in my book when it comes to all precious metals right now. And let's keep an eye on how the dollar handles 24.40.
And that bear retracement obviously is now a failed bear retracement in that regard. It did come back above the pivot, but now we've got another battle here at $1,900. I mean, that's another pivot point, moving average, key round number. Short-term technicals are always going to have some complexity in it. That's why I don't think about gold as a short-term timing instrument, frankly, for me.
No, and quite frankly, Tim, gold's up 100 points in the last week.
Yeah.
It's not up a small movement in the past week. And now what are you fighting? You're fighting that many, many, many levels of resistance to the left that could obviously drive gold down. That's why I say you're going to need some time here on the gold chart. But because of the complicated nature of the gold chart, that's why I'm also putting a little bit more credence on the dollar chart, because I think the dollar chart is much easier to read than the actual gold chart is right now.
Yeah, I'm with you. And by the way, real productive and constructive charts in copper stayed that way. Platinum stayed that way. A lot of interesting metals out there.
You know, and I obviously talked to him about all the metals out there. We took a look at copper. Both of us, you know, kind of expect copper to break out and continue the price movement. You know, obviously as copper drives up and up and up, you start getting into some historical resistance areas that you got to be a little bit concerned about. The 3-3 breakout was legit. We all know that. Now you're thinking about, okay, if we consolidate, where is that top end before you got to be starting to get a little concerned with the price appreciation on copper. I personally put that into the 375 range is where I put that, which means you got plenty of room to run on copper. Just allow it to, you know, establish that high base a little bit more. This was the first day on copper. We've kind of tested that 9 in the high base, obviously constructive from a momentum type perspective. That would be the alpha 9 pattern Mark talks about, right? You do have increasing momentum coming into the trend. You do have some consolidation where the 90 MA catches up to it. And so obviously you're looking at breakout mechanics on copper here. When you're looking at some of the other metals, you know, palladium itself has been kind of stuck in a range. Both Pete and myself kind of just saw nothing really to see here with palladium. But platinum specifically, I had a question for Pete, because we've seen platinum pick up here in recent memory. And a lot of times platinum, silver, and palladium, even though they won't run simultaneously together, a lot of times they move in the same direction together. I wouldn't exactly call them correlated, but they are all industrial metals. So there is some correlation there. But we are starting to see platinum specifically pick up a little bit more. And Pete had some things to say about platinum, why platinum is moving up. So definitely check that out. The one thing I want to bring up, and we talked a little bit about this on the pod yesterday as well, if you look at the long-term chart on gold, platinum, silver, and palladium here, specifically looking at platinum, and know if you can kind of take a look at /PL on a 10-year weekly chart. Platinum has not participated to the same extent over the last 10 years as, say, gold has, silver has, certainly not palladium. Palladium was, you know, one of those precious metals that just went gangbusters from 1800 all the way to 2400. Just had palladium had one of those 2-year time frames where it was like literally one of the only instruments you focused on, because it was just so hot. But when he was talking about palladium specifically, you know, what he was talking about made me want to pull up the long-term charts, because what you're starting to see a little bit is you've been in this prolonged neutrality between $800 and really $1,000 in platinum for the last, you know, 4 or 5 years, really. You're starting, and obviously the volatility that we saw here in early 2020 notwithstanding. But even take that out of the equation, you're still range bound between 800 and 2,000 even this year. You're now breaking out of that $1,000 range. You're now breaking out of the historical pivot points at 1030. You're now starting to see some real price appreciation here in platinum. And although I'm not there from a fundamental perspective, what Pete talked about yesterday made me want to get there from a fundamental perspective, if that makes sense. It made me want to go do some research in specifically platinum, especially when I looked at this chart and I started seeing a little bit of longer term reversal mechanics going on. That breakout of 1,000, we're starting to see the momentum. And obviously the question as of right now, with any type of momentum you're seeing in the market, is can it continue? Well, we're seeing momentum to the top of the market start to slow down. We're starting to see some of the bottom market mechanics, especially over the last couple of months, start to pick up. I'm kind of getting a little interested here in platinum, and I think you could easily give it all the time you need necessary to do all the research you need to feel comfortable on it, because this thing is a very long-term analysis. But that conversation with Pete certainly sparked my my thought process.
Well, just from a pivot point analysis, trend analysis, and understanding technical analysis, it's very exciting what you're seeing here from a long-term thought process. You were in a downtrend, you were under pressure, you were stuck in the mud, higher pivot low, higher pivot low, higher pivot high, looking for a breakout, testing some zones, key levels. Yeah, you can see reversal characteristics on the chart here. There's no question about it.
And Pete had some other analysis, obviously, hydrogen, water. He was big on hydrogen and water.
Are they going to do water futures? Did you talk?
We're talking about that this morning in the lounge.
They should.
They've got it. No, they do. They
have it.
There's rumors about it.
Yeah,
When's
I don't know
coming?
let me see if I still got it here. Hold on. It's like today.
It's like getting released.
Like yes, like no, like seriously, where did it go?
That's beautiful.
Here it is. Boom.
They probably won't be actively traded.
Okay,
give it some time, but that's
trade
awesome.
Date, Monday, December 7th, 2020.
Boom.
Clearing code H2O.
About time. Although I always get very, very hesitant when the futures market gets introduced something for the first time.
There's a little dystopian aspect to this that I don't like. You know, they now own your water rights more so.
Yeah.
Nestle's been pushing for this for years over in Europe, so
yeah,
it's happening here.
I am glad it's in the futures market, and I am glad because I look forward to trading water in the futures market, but. Because there's obviously water companies you can trade and invest in and whatnot. But like a lot of like products, you like to go direct to market, and that is the futures market. I just get a little, and don't take anything from this. This is just me. This is a me problem. I just get a little like my paranoia gets a little spooked a little bit when the futures market is introduced for the first time, because it's like I know those hedge funds. I know what they're going to do.
That's right.
I know their levels of manipulation, and I don't like it. So I like it, but give it a little bit of time.
So I'm sure, Noah, it put you completely into Mad Max, prepper mindset. They're going to control the water markets. And
I already have that mindset. I don't need this to give me that mindset. This is not the apocalypse I was promised. But no, I think it's interesting. We were actually going in and figuring out that they price the units in 1 foot acre. I guess that's what they've got it priced in. So that's interesting right there. We kind of looked up how that's defined, and looks like they even have like price points laid out for it. Like 529 is going to be, I believe, the opening price there.
Are they doing minis too?
I don't know. I would definitely be interested.
They probably will down the road.
Yeah, absolutely.
Yeah. One of my buddies, Steve, all of our friends, Steve Andrus, I remember when we were in classes in front of live students and talking to him, he would always talk about this when we talked to oil. He felt like the history of the world, I mean, the last 100 years we fought over oil. He felt like the next 100 years we're going to be fighting over water rights and water. I don't know.
Oh my goodness. I finally had like this moment of clarity for a second.
Mm-hmm.
Like yesterday, Pete was talking, we were complaining. We were done with the pod and we were in like complaining mode. Like we were just like buddies hanging out, right? We were just complaining about certain things. And he was complaining about, he's been trying to get this contract in the futures market for years and years and years and years. And now I understand why that conversation took place.
Oh, he's been stumping for this?
Not for water. It was a
different
metal.
Contract.
It was a different contract. And he's like, I've been trying to do this for years and years, and the CME just won't play ball with me. And I'm like, yeah, okay, I'm with you, Pete. And now I understand why Pete was upset.
That makes sense. Oh, that's funny. By the way, this is not
tell me about the water, Pete.
I think quote of the day. Somebody typed this in the chat for me. This is not the apocalypse I was promised.
I was promised. This is not the apocalypse.
I'm not going to forget that.
Oh yeah, I already wrote that down. Line of the day.
Absolutely.
In fact, just titled the halftime report today. This was not the apocalypse I was promised.
Fantastic, sir. No, a quick peek at oil and Bitcoin. Not much to update the charts here today. I didn't have any news on either item, but just give me a quick look at the daily chart. Then I want to get into some of the stock news that we got today.
Yeah, after that big rally, you kind of see prices just stagnate on oil. It's poking its head back up above that. Looks like it's got a little ways to go before it retests that 50, where it's been multiple bottoms at the 50. So what I suspect is going to continue to slowly grind higher up to 50. You might get a little retesting here before it does that, based off of that little inside candle, but not a lot going on there in oil. And what was the next one you want to see? Oil, then what?
Bitcoin.
Bam. Got a little inside consolidation right there. It has a bit of a rounding top right there. That big fat 20,000 coming. I could see it dipping, maybe crossing back into the 20 if it starts to break down. But I'm sure that this is going to be buy the dip territory for all the Bitcoin bugs out there. Just based off of how quickly it recovered off of that, that little sudden drop it put in back before Thanksgiving, and very quick recovery. I don't expect many dips to last long. I'd be a buyer at 18,000 off of that 20. That'd be interesting, and I'd be probably looking at a breakout. If you don't get the pullback, the breakout is probably just as viable.
Mm-hmm. Yeah, I would agree that the breakout's actually not just as viable, but actually more viable in my opinion. The buy the dip crowd, there's nothing wrong with the idea of getting a good solid bullish retracement, but this breakout here is a significant level. Forget any kind of long multi-year analysis. Just from a short-term perspective, Matt, 20K breakout is something that any Bitcoin trader needs to be paying attention to, right?
They don't need anybody here to tell them to pay attention to 20K. They've been preparing 20K like Noah's preparing for the apocalypse. Like that's how far they've been planning this for like years in the making now.
I'm really more of a prepper hobbyist than an
I know. Yeah.
Prepper light.
So you're a hobbyist, you're not an enthusiast.
My plan is to survive the first wave and then see what happens.
Then you're good. Okay, I like it.
Is a prepper hobbyist just a camper? Like you have a
tent pretty much. I got nice camping equipment and ready to go.
You got a tent and a lamp.
I got a tent and I've got like a pantry full of food. That's not it.
You got a solar lamp though? You got to get
I do have a solar charger, but I need to get a better solar charger for sure.
Okay. And that analysis is the same as the Bitcoin 20,000K analysis, but the longer this consolidates, I do think it's getting to the point where some action is going to happen here. Yeah. We were talking actually after the podcast yesterday, we were talking with you and Jake about Bitcoin, and all of us saw the exact same thing. The 20K breakout's legit. Every trader's waiting for it. It's just a matter of how exactly do you want to play it. Personally, because this is such a major resistance zone, everybody's anticipating it. Everybody's looking at it. I would say confirmation is ultimately key here. And if you miss out on a few points, you're fine. You're fine, right? I think a confirmation is key here, and at least breaking out of some of those intraday tops there at 20K 300. So, we're a ways away. We're at 19,000, but obviously we all know what Bitcoin can do. My point is, I think confirmation is key. 20K is key. Consolidate for a few more days. That's fine, but eventually you're getting to the point. I said this yesterday. You're getting to the point where it's got to do something. Because you see that 9 EMA, it's still playing support, right?
Mm-hmm.
But what happened today?
Poked its head.
It poked its head underneath it, right? Mm-hmm. You're starting to see that 9 EMA rolled the lightning the whole way up. It's still riding the lightning today. But what you're seeing today is a little bit of an indication that 9 EMA is getting a little weaker. it's getting a little weaker because the consolidation now is enough time frame to where you're now looking at it as a rounding top and not just a high base type situation. You still like it, you still love it, you're still anticipating it, but you're now looking at this saying this thing's going to break fairly soon.
Well, check it out here on the hourly chart with that 200-hour moving average. You got just perfect symmetrical triangle, poking down a little bit below that 200 on the hourly chart, the same way it did on the 9 on the daily chart. I mean, that's interesting. So, I mean, yeah, I can see where that's got the potential to tip and drop. And I think you'll get a quick sell off if you do, but then the buy the dippers will step up quick, I think, as well.
Well, and I certainly think the buy the dippers, especially with what happened on Thanksgiving, will step in. No doubt. I think they'll step in, but I also think it would create some really crazy volatility in the short term as well and throw off a little bit of that potential breakout of 20K. And so even if it does dip, gets rebought back up, you're still looking at 20K. The stronger trade is for it to actually maintain the pattern and break out. I think we're getting close to that.
Yeah, but that battle is developing, and the longer we roll over on the 9, we're hanging around this 19. It's going to do something here. You know, it's not going to just doji for 6 months in a row. It might consolidate for a little while longer for sure. And I have no problem if it just wants to doji, then show me a signal.
I know, but at some point you got to call a rounding top a failed breakout if it doesn't break, and which means I wouldn't have the same belief in the retracement.
Yeah. But we're not there yet. Still holding the 9. I think that's a little bit early.
But my point, though, is, Tim, if you're anticipating a high base, and we see this in stock too, but it doesn't ultimately break, but eventually retraces, everybody hates the rounding top retracement.
Yeah, no, it's not a great pattern.
But think about it psychologically. You were anticipating the breakout. It didn't, which means it failed that breakout pattern. It came down, which means you have a different probability projection on it. It becomes a different trade. So you got to, if you're looking for that breakout at 20K, you want that market to hold that 9 EMA and not do a double dip type bottom.
Yeah. All right, guys, that's our market skyline top-down analysis segment. We're now going to transition into individual stock news. We've got some companies I want to talk about today. And then also in the coach's corner later in the show, we're going to have Noah break down some charts, do some prep for us. Let's start with Uber if we can. Noah, bring up that chart. And by the way, if you're out there watching the show right now, appreciate you guys. I do this at least once a week, always asking, for some engagement and some participation in the chat there. I love it when you guys do it. Just type in where you're watching this show from. I think it's a good reminder. We've got a big audience all over the place. Team Tackle is a global thing, and we appreciate all of you. But where are you watching the show from right now? I'm in Salt Lake City, Utah, and enjoying it. Let's talk Uber first here. Uber, they have been putting money into an R&D project for some time. And Noah, while we're looking at this chart first, give me a weekly if you can. I want to have a conversation in the context to its IPO price a little bit as well. Matt, this company's had quite an evolution. They've never really quite made money. They've always had all these loss leads that they're developing. We know this is one of those growth concept stocks that people who believed in it on the IPO came in and gobbled it up. The move today is an indication that maybe they're making some transition in their business. I'm still thinking through exactly what it means. It's merging its advanced technology groups with autonomous driving startup Aurora. It's throwing $400 million in cash into the deal to get a 26% stake in this deal. But basically, Matt, this is a capitulation on their own personal R&D project that they had put $5 billion into over the last several years.
They figured out what Apple figured out 10 years ago.
Yeah.
Why spend any money on R&D where you can simply offer stock and acquire technology?
It's not a bad plan, and
think about it.
Yeah.
Uber, we don't know. Uber doesn't specialize in autonomous vehicle drivership. That's why they put $5 billion in investment into it.
Mm-hmm.
Aurora does. That's what they specialize in. So why spend the money in R&D at the company level when you do not know if you can create the exact same or better technology, when you can simply take other people's money, i.e. stock, and acquire the technology anyways, that not only has better technology than what you were developing and what you would eventually created, but also has Amazon backing.
Mm-hmm.
This seems like this seems like a good business decision.
I think it is. I mean, listen to what the CEO had to say. Basically, this division of the
and by the way, very quickly before you say what the new CEO says, it was the old CEO that made the decision to put the $5 billion in the investment account in the first place.
Yep.
The new CEO is like, no, we want a Tim Cook Apple this. We don't want a Steve Jobs Apple this. There's a difference in philosophy at the corporate level.
I agree with that thought process. It feels like old management had a concept. They had a baby they wanted to grow and build up here. It didn't work out. They were continuing to lose money.
It's a big baby.
It was
a $5 billion baby.
That is one big baby. By the way,
baby.
The $5 billion is over the course of years, but even in the last quarter, Matt, they lost $104 million on their pre-tax in their earnings report just from this division alone. They're losing like $400 a year on this project. So it makes sense to me that they're trying to move it into a different type of structure.
Yeah. You have brand awareness, the brand image, and everything about your company is brand based. Don't spend money on R&D. Simply acquire and build your brand image.
Yeah.
Apple it. Uber absolutely needs to just Apple this.
I'm interested in Uber for next year. I don't have a
trade
on
decision. It's a smart decision. I like the decision. I'm more interested in Uber today than I have been at any point during the IPO.
Post-election, last earnings report, the market reaction, and then in the context since the IPO. And Matt, you and I were talking about this before. I mean, how many IPOs over the years did we watch come? And they got all the fan for it, all the excitement, and not all of them just work out the gate. A lot of them fizzle.
83% of them.
Yeah, and so
I made up that number, by the way, but it feels like 80% of them.
It feels like in the life cycle of a stock, we're actually moving into something that could be interesting. Know what you read on the chart here.
I like the chart. It's kind of grinding higher, just doing this clean little channel, rising up above that 9, riding that lightning. Even though you got a gap down, it's already kind of filled that gap. Little inside action there. I think you could probably look for a clean breakout above 55 here. Right above that high of 54.87, but all signs are pointing to bullish on this. The weekly chart looks good. It's back up. It's right there, the all-time highs. You gotta like that.
Yeah, I agree. And Matt, what does every CFO like when you stop wasting money?
Stop spending money.
Stop spending and wasting money on projects that you don't need to. And start doing
what's the easiest thing to point to in Uber saying you guys suck? Their debt.
Yeah.
Right.
Yeah.
So I like the decision from Uber, and you're looking at Uber here, and in a world where, and I know Uber's up from like the low point of 13 all the way up to 55, but coming into the year, I mean, you were about a $35 stock. Your current 55. The IPO in 2019 was priced in about $42. Was it $42? $42, $43 a share. When you look at that on the weekly chart here, Noah, you're seeing a breakout post-election of the all-time high, the IPO price there on Uber. You are certainly range up here in any degree of short-term analysis. Not on the daily chart. I'm obviously talking on the weekly chart, but I think your interest has to be peaked here. I mean, Uber's breaking out of the all-time high. You're seeing strength in this. Good decisions coming out of management. What do you think, Noah?
Well, I think coupled with vaccine news and this idea that once the economy starts to reopen, I think Uber's got the potential to really sail. I think that's probably the only thing that really has had it held back in my mind. It's just the fact that social distancing, and Uber's still probably a good way to get around, but people just aren't moving around as much. So I think all signs point to yes, and a broad reopening of the economy with vaccine assistance. I think it's off to the races.
Mm-hmm. I don't know if I'm there on the short-term part of it. I like the chart. I like the constructive nature of it. I'm excited about it in 2021. It feels, like it's got opportunities here, no doubt about it. And I think the analysis about what the management team's doing, I'm starting to like it, Matt. So it's on
I'm not there yet, right? From a long-term perspective, I certainly agree with Noah on the momentum above 55 there on the short term, but my interest is peaked. I like the constructive nature of the chart. I like the fact it's breaking out of the IPO price. Finally, people who bought the IPO after what happened in 2020 and 2019, trade war, pandemic. Finally, they're showing some profitability after a year and a half. So I do think it's on the radar. I'm not there yet from anything longer than a swing trade, but it's on the radar.
Mm-hmm. Tesla next, if we can here. I'm talking about, just one of the hotter stocks in the market now. Tesla's been there throughout 2020 and even 2019 has been in a blast off run. Tesla decided to do this again here today, Tuesday, to raise more cash after an incredible move. I mean, since their announcement on inclusion into the S&P 500 on November 16th, stock is up 57.3%. So what does Elon Musk decide to do and the management team? Well, let's sell some shares, raise $5 billion of cash, and increase our balance sheet just a little bit. Matt, after a momentum move like this, when Tesla did it the last time, it stalled it for a second, but then we see the chart. Nothing seems like it can derail this company. What's your read here on Tesla?
They did this, what was it, about 3 months ago?
Yeah.
And it went up?
It went up.
Tesla's going, where is anybody going to be shocked when Tesla's at 1,000 in like 6 months from now?
No.
Do you think it's going to take that long?
I was trying to be conservative.
Yeah.
But no, this stock represents if there's one stock, it's amazing, Tim. Google is probably, and I'd have to check this, but Google is the highest rated ESG company. But
it's an A rating, yeah.
I think Tesla is the poster boy for ESG movement, though.
Mm-hmm.
And that movement is not going away anytime soon. And so we all know this, it goes without saying. Tesla, what you see on Tesla's chart is not just Tesla's company. And that's where I think a lot of people get really confused with Tesla. Is like, how in the world is this company up, 10-fold, 20-fold, 30-fold, 40-fold, 50-fold, whatever you want to do based on these fundamentals? Well, no, Tesla's never traded based on any degree of fundamentals, not in 2020, not in 2013, not in 2017. It's the poster child for ESG is what Tesla is. And that's why, and obviously Elon and the fanboys, and we know how strong of a consumer mentality people have around Elon as well. But it does represent something bigger than actually the company itself.
I agree. And for an entire class of investors, that ESG movement is one of the top things they consider.
And when we're talking an entire class of investors, Tim, we're talking entire generations coming into the market.
Yep.
Right? Yep. We just are. This is not the baby boomer market any longer. It's just not. It's time to update those protocols.
I agree. Been an incredible run there. Obviously, very interesting chart from that perspective. I love the breakout. It was on the option report over the weekend, triggering yesterday. Let's take a look at U.S. Steel, if we can. X. You want to talk about a juggernaut in a chart perspective on the short term. I mean, I know Tesla's had a run here, but U.S. Steel has had a very impressive run just over the last couple of weeks. Matt, this stock, along with many of the metals-based companies, we had Nucor. We've highlighted so many of these steel companies. It just took off. Steelmaker today, they acquired a part of Big River Steel, which they already own some of, buying another big portion of the stake, increasing their ownership of that. That acquisition is being taken very, very positively by the market, but steel in general has been hot. What's your read here on U.S. Steel?
It's not just U.S. Steel, although U.S. Steel has been extremely hot here. We've seen a lot of price movement going into a lot of the areas of the market that you would feel is, infrastructure based, economy reopening based, industrial based. I mean, industrial itself has been very, 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 very hot, post-election, kind of just in the same vein of thought that, the energy space has to a certain extent. Still has outperformed all of that, right? Personally, I've rode the roller coaster on U.S. Steel many times. I've rode that puppy from 8 to 40, and I've rode it from 40 to 13. I didn't ride the wave this year. I didn't ride it last year, and I honestly have no desire to get on that again. So I'm not touching U.S. Steel, and maybe that's a little bit of an emotion, but when the VIPs made me mad, I never touched it again. Outside a couple trades, when there's what's the famous one, Tim? GoPro. Yeah, missed out on it. No, out. I'm done with U.S. Steel. I cheer for this company because I like this company, but I have no desire to ride that roller coaster on U.S. Steel any longer. I do like the movement though, and Nucor is in my opinion,
Nucor's more tradable.
NUE Noah. So like I cheer on everybody making money in US Steel. I cheer on the company. I cheer on everybody making money on US Steel. Love that. But Nucor, to me, even though it has not been the mover that obviously US Steel can be, Nucor is a bigger company. It's a better company. It's a better fundamental company. They have better contracts. Overall, it's a better cash flow company as well. So you're not going to have to deal with the volatility, roller coaster that you have to deal with on US Steel. So if you are looking at Steel and trying to take advantage of that, I know US Steel is just on fire. I actually like the constructive nature of everything from technicals to fundamentals on Nucor more than US Steel.
Mm-hmm. Yeah, no, bigger company, better options.
And again, listen, I'm back here going, go US Steel. Get up there. You go, baby. Get on that Elon Musk freight train. We need to build a railroad all the way to Mars. I'm with him. I get it. But for me, Nucor's the play, not US Steel.
Mm-hmm. Next one here, PLTR, if you can. Palantir, the very popular company that just got out of the market here recently, got past the first earnings report. It's been a juggernaut the last little bit for these higher flying Momo type of traders and whatnot. They got a contract actually from the FDA announced yesterday, $44 million contract. The stock really ran on that news. Noah, do you trade companies like this that are just catching the consciousness? They're grabbing the attention of newer traders and all that. They're becoming these high flying Momo stocks. How do you approach something like this?
Maybe I should, but I don't. And that's probably because I've tried to chase some of those things earlier in my career and learned some lessons. These types of things that move and fly like that, I don't begrudge the people who do. I just like trade history. I like knowing where support and resistance are. I like options to be really liquid and serviceable. But that chart, boy, seeing it pop from 10 to near 33 at a high, decent little pullback. You might consider a breakout on it. I'd have to sit down and look at the company's fundamentals and really understand it before I ever went off something online like that.
I can give you a little bit of a tease. There's not fundamentals. So many of these companies, they literally, this contract they got getting 44 million, that's some of the best revenue they're going to make. So this is all based on the belief of what they do and the contracts they may get moving forward. It's just a Momo stock. We've seen this so many times this year though. Matt, how do you approach these types of names? Do you just kind of process the news, wait for 6 months or whatever it takes to get you a chart that you like? I mean, what do you do with these kind of stocks?
Dude, you need to bring Mark on and ask him about Palantir, because I have zero desire to trade this company.
He loves this stock.
I don't have.
Well, I mean, is he just selling naked puts on it?
There's 30 stocks on Mark's top 100 that need to go.
Somebody has to.
Somebody needs to. We need an intervention for Mark's top 100 because he's acting like he's 22, and he's not. He's not. He doesn't have the time to make up those bad decisions if they go completely awry. We need to have a tackle trading intervention for Millennial Mark. Millennial Mark needs to go.
He's making a resurgence. Millennial
Mark. I know, it's driving me nuts.
Absolutely. All right, one more, maybe a couple more in the news, Matt. But you had a couple earnings, I believe. Maybe Toll Brothers. I don't know if you got those numbers or not. Boeing.
Yeah, I got Toll Brothers.
You got Toll. Okay,
I got whenever you want, T. I got Toll and AutoZone.
One more for me, just Boeing. Just a reminder. I know this stock we've talked about it as a reopening type theme and all that kind of stuff. Boeing was a part of our Dow draft we did a week and a half ago on the podcast. Give me the chart on BA if you can there, Noah. Matt, Virgin Australia and Air Lease and other customers that have been putting in purchases for their 737 MAX airplanes, they canceled 88 orders of those planes in an announcement the company disclosed here recently. Just a reminder, this stock is not out of the woods by any stretch. I know it's had a good run.
No, it's certainly not out of the woods, and obviously this news is just an indication that it's going to be a while before not just like the consumer confidence in Boeing and their planes. I'm not talking about that. I'm talking about from an economic perspective, these other airlines, ordering these planes. I mean, so I do think what we saw today with the news that you had Virgin Australia and Air Lease cancel 118 planes. They canceled 88 planes that were purchased. I think this is more economic type scenarios that are going on right now than it has anything to do with the 737 MAX plane. Year to date, though, I mean, this is where Boeing's at, guys. I mean, we know what their orders were this year. Last year, they delivered 345 planes. This year, they're going to deliver about 118 year to date. So, you know, it's been that year for Boeing. There's no doubt about that. It's been that last 18 months for Boeing. Nothing today in Boeing should surprise people, though. And I think that's why you're not seeing any type of, you know, aggressive price, because we're not talking a couple planes here, Tim. 88 planes is a big number. But I think one of the reasons why you're seeing this is not anticipated. And I don't think this has anything to do with anything other than economically right now, people are going through a little bit of additional pain. And I think the market is saying, okay, that's fine, but 6 months from now, 4 months from now, we're all good. Don't need to worry about that. So I think this is news today, but it's more just information than anything.
Noah, where's the next entry point on this thing? If you're mapping that out visually.
You thinking bullish?
Well, I ain't thinking short. No.
Let me back it out to the weekly chart and get a look at that. I mean, you know, up above that base, got a little gap to fill. Little sideways base. I mean, you could trigger right above the high if you've got that bullish bias on it. I might be more interested in a pullback to the 9 and, you know, give me a little pullback action, and I'll watch a setup on that. For me, this would be one I just kind of wait and see.
It needs to develop, right?
Needs to develop something that yep, absolutely.
All right, sounds good. Maddie, last one I had was Toll Brothers. We'll talk earnings on those numbers if you got them. TOL, Noah, if you can. The old home builder here, Matt, you know, obviously they had a great run there, you know, middle of the year, running, moving. They've been in consolidation mode for a couple months, though, kind of hesitating here since mid-October, whatnot. What did we learn from Toll Brothers' earnings report?
Well, Toll Brothers came in at $1.55 versus the expectation of $1.23. The revenue came in at 2.5 versus the 2.1. Revenue was up 7% year over year. You know, the numbers we saw at DH Horn, Toll Brothers, KB Homes, Lennar, Pulte, all these home builders this quarter were not bad. They were all very, very good. Tim, we haven't talked about the home builders very much in recent analysis because obviously we have some degree of concerns coming into next year, especially with how taxes are going to be utilized through, you know, purchasing a home and getting the loan to purchase a home. We do have those concerns. I think those concerns are shared with some of the rest of the market. And that's why you're seeing some degree of neutrality for the last, 2-3 months in DHI, in Toll Brothers, Lennar, KB Homes, and so on and so forth. Hasn't really participated in the speed and the recovery of the market post election, even though home builders, even though that industrial play that would fit the overall, there you go, William Shakespeare, that would fit the overall theme that's developed in the market post-election. The home builders haven't participated in that. That's got to be a little concerning. You also got to be a little concerning that you miss guidance pretty aggressively here. And so you had a decent beat on EPS numbers, you had a decent beat on revenue, but your 2021 outlook was just not very good. You had to lower the guidance. And so Toll Brothers got to be a little concerned, but I have a general concern over residential real estate coming into 2021, more so because I simply do not know how that loan processing is going to happen, because I think we can anticipate fairly aggressively some scenarios next year that are a little bit worse from a fundamental individual perspective than they were this year from a tax perspective. And so that's going to be interesting to see how that works. Maybe they adjust, maybe they do different things. We don't know. That's why I say I have concern, and not just be like, this is just an outright just, get out of the way and stay away from this. I just have some concerns. Now, Toll Brothers itself, down today, not really seeing anything. XHB is a little bit more constructive than Toll Brothers is itself. And so when you're looking at the home builders itself, you're still looking at that as some degree of neutrality. You are seeing a higher pivot high coming into potential breakout channels. You're riding the support level of the 50-day moving average and the 20-day moving average. So let's see for a little bit, see if we can break out of this range. But I do have my personal concerns there, and Toll Brothers certainly added to that concern here today with their guidance. Again, EPS numbers, revenue numbers were fine. Guidance was very concerning. Now let's move on to AutoZone very quickly, Noah. AZO, if you don't mind. AutoZone reports earnings numbers at $18.61 versus the expectation of $7.72. Revenue came in at 12.9% year over year. Guidance was a little bit concerning here as well. AutoZone neutrality really for, summer on last 6 months, just a massive degree of neutrality. This break of support at 1100 though has to be concerning for anybody in AutoZone. Number one, AutoZone has not participated in the industrial play post-election. It's been an underperforming against the sector for months and months and months and months. It's had a very difficult time catching up with any degree of bullish momentum over the course of the last 6 months, and now you're violating a support level with a no buy day on a negative reaction to an earnings report with not a lot of support until you get down to $1,000 range. And even at $1,000 historically on AutoZone, it is certainly one of those very significant whole numbers. There's no doubt about that. In terms of that ultimate $1,000, $10, $50, $100, those things like that, this trigger psychological levels. But underneath $1,000, and again, $1,000 is a nice support level. But underneath $1,000, you're talking 200-day moving average, and that's where I'm looking at here on AutoZone. The weakness over the last 6 months, it's failed to participate in the market. This is your first violation of support on negative reaction to earnings. In a world that wants to buy everything, and that's our world today, AutoZone, it just like this is a stay away to the point where you never know what happens in the market right now. But if you're an investor in AutoZone, you got to be concerned, and you got to be thinking 1,000 or 900 is in play here, which means you're probably looking at insurance if you're an investor.
Mm-hmm. Mm-hmm. Just think about just one basic thing. We're having a very negative reaction to today. There's concern based on what you're talking about, reading the numbers, but even stock hasn't performed at all since May. It just really has been stuck in this long-term consolidation. And give me that quick weekly chart, Noah. Now that you're post earnings and you're pushing lower, Matt, it's not a pretty chart if you're thinking double top, rollover momentum, that kind of thing. Now, it's not broken all the way down yet, but definitely some concern, some hesitation if you do invest in AZO. All right, guys, any other companies on news?
Majid had a question on Plug.
No, you handle it. No, we're good. No, I want to.
Well, if you wanted to take a quick peek at the chart, I'm just responding to a technical. And I want to see, have Noah take a look at Plug. I want to see if Noah has the same read that I have with Majid.
Nice momentum, decent breakout. Wish I'd bought it yesterday. That's kind of my take on that. But it's definitely, if it can maintain a close above resistance, it's got some upside potential on that. And it's got really solid momentum, big volume behind it. That's always a big plus. Again, just need a time machine to go back to the morning.
So Noah, I said, Majid, a nice trend and pattern. If you were in, ride that baby. If not, it ran too far. Wait for a new trigger.
Yeah, I agree with that. You could look at today as a breakout, so you might consider follow through. But but if you're already in it, congratulations, well played. If you're thinking about it, if you get a breakout from here, how far out do you project? That can run. 32, 35, certainly could.
I my philosophy of 30. I would love a day or two right underneath 30.
30 is a fat number, so that's a hard one to break. You look at how it behaved at 25. It popped. It slowed down below 20. So, if you like momentum trades, you can try it. Use a trail stop on it, because the last thing you want to do is try to put a trigger above the candle high and have a stop way down there.
Yeah, that's my problem with it. You momentum trigger above the high, you're triggering underneath 30. I don't like it. So I do like it. And again, Majid, you're in fantastic. I think you're just now talking about stop loss management. But in terms of an entry, I would love a tiny bit of consolidation, clean up that trigger above the intraday level, maybe give us some consolidation right to south of 30. I see it, Majid. I'm with you, brother. I just need to clean that trigger up just a little bit.
By the way, stock up 17% on a high volume pickup day instantly makes me think of news. I can't find it. If you're halftime crew and you can find the news on Plug, the post in the chat, I'd love to know.
Instantly makes me think 2020.
It's 20, I mean, but that's the thing though. You can have a 17% move on a stock.
I'm sorry. People are gonna talk about this 2020 year for decades. The traders are for decades. Hey, remember that year of 2020 when everything was upside down, like literally everything? We changed our entire fundamental analysis that had been dominated in the market for hundreds of years, but yet we threw Warren Buffett and all his analysis to the woods, and we said, let's just go buy all tech plays, baby.
Mm-hmm. Mm-hmm. Yeah, it's gonna be
it's okay. I don't believe we have a massive market crash in front of us, but there are going to be many crashes that are underreported in the underbelly of the market that nobody ever talks about ever again.
Yeah.
And I think 30 of those stocks are literally on Mark's top 100.
Intervention time. I think we might
need intervention time.
Millennial Mark. All right, guys.
Tim, there might be a reason he worries so much about the end of the world happening, and yet you and I don't. Because on our watch list, we have like Walmart and Disney and Home Depot,
which will survive the apocalypse. You know, they'll be there just fine.
Stocks that are now $25, wondering if they're going to continue the momentum. Yeah, it's so fascinating. 2020.
It certainly can be.
In fact, Mark represents 2020 more than any human being in the world right now.
Maybe him, Mark, and Dave Portnoy. Yep.
Dave Portnoy. Yeah. Mark and Dave Portnoy.
I still, I'll never forget Mark saying Dave Portnoy, I will take you in a fist fight, calling him out on YouTube. So Dave Portnoy, if you do want to get into a scrap with an almost 50-year-old man,
listen, if Mark can end the fight in 30 seconds, I'm betting on Mark. If he can't, he'll run out of air.
Bro, I know how country kids can scrap. I'm betting on Mark. Not even
I'm not betting against Mark. Are you kidding me?
In my mind, not even a debate.
I'm sorry, nothing against Boston, but I'd take a hick from Emory County, Utah, any day in a scuffle.
That's right, corn-fed country boys.
Those corn-fed country boys are dirty, filthy fighters.
That's right. One thing I did want to do here today, Noah, is kind of put our teaching hat on for a few minutes here at the end of the show. Tuesdays with Noah. When I think of you, I think of charts first. I think of technical analysis. I think of that kind of timing and entry point type of analysis as well. And Noah, we've got a lot of new traders out there. We've recently had a promotion over at Tackle Trading for our Step System course, and we've got a lot of new students in that Step System course as a part of that community that's been around for quite some time, learning how to find entry points and execute them one step at a time. So we're going to bring some charts up that I found either number one from the weekend reports, or number two, I found a couple from Coach Frank on Twitter at Tackle Trading on Twitter. He posts great charts on a daily basis. So I got a couple here. Noah, can you build a couple trades for me? Kind of walk me through it. Yeah, absolutely. Let's, and I'll let you take your pick here. I found one or two breakouts on a stock report. You can pick one. Okay. TAP, which is Coach Emily, who did the report. It was her favorite pick coming into the weekend. Had a couple of nice little green candles here. Looked like it poked its head up earlier today. We could build a breakout trade around that, or DAR, which is also a nice consolidation breakout. Now, I think DAR might be cleaner personally.
Yeah, I like DAR a little bit better. And TAP, I'm just not a fan of Molson's beer. It's just not my favorite. I mean, that's all more power to you, but I think they're putting like sugar in it up there or something. I don't know what they're doing. It's a little sweet. Mm-hmm. So I'm going to go with DAR on this setup. Just looking at the two charts, great setup on TAP.
Pause, time out. Listen.
Hey.
You know that beer is literally made out of sugar, right?
Yeah, but the yeast there's still sugar left in that. As
an amateur brewmaster who used to brew his own beer, that's literally what beer is. They take sugar, the yeast eats through it. And
Yep. I understand that, but it's like they over poured a little bit too sweet.
We don't know. I have to go off on a rant here today, but go ahead.
I'm gonna step in. It's not literally made of sugar. One of the starting products is sugar, because as soon as the yeast changes it, it is no longer sugar. It is not literally sugar.
Look at the
turns
big
it
brain
turns
on
it into
Cody.
magic sauce.
Listen, I have brewed a beer, Cody. It is sugar. It is pure sugar.
It's
When you're at that
sugar, but anything that chemically changes, it's no longer that thing anymore. If you get a molecular change, then it's no longer that thing.
You and
anymore.
I can debate it after. We can. I promise you. I will have that conversation.
Because I mean, that's like saying, some chemicals are poisonous, and then it's like you mix them together, they're no longer poisonous. It's like, yeah, because they're no longer the same thing anymore. Once you change the structure of something, it's no longer that thing anymore.
Now you're getting me all sidetracked. Darling ingredients. Darling ingredients. I think it's got a really clean setup, trigger, place to put a stop. This is probably one of the easier technical setups you'll see, Tim. Really clean. It's got a bit of that ascending triangle look to it. So just kind of let me highlight that. You got the higher lows. You have a common high right here at 50, and it's poking its head up above that right now. So you got a clean entry on that. Now, if I were looking to plan a trade on this, I would be watching for it tomorrow. Probably not today, but tomorrow I'd be looking for it to take out today's high, wherever that ends up being. And then I would put a clean stop loss all the way down below the candle low and the 20-period moving average. And I would give it a little extra cushion. I usually take the ATR, which is, again, that statistical measure of average daily movement. And it's $1.60. And I would say I'd give it at least 10% of that ATR, maybe a little more below that low. So I put the stop loss maybe 16 to 32 cents, somewhere in that neighborhood, down below that low, just to give it some wiggle room. And then I would position size based off of the distance between my entry price and that stop loss price. And then for upside potential on this, based off of the size of this run in here, where it kind of ran from 40 out to 50, I think it's got a good 10 points of upside potential. So I'd set target 1 at about the halfway mark, 50, and then I'd set target 2 out just under 60. And
55,
60. Yeah, okay. 55, 60. And that, did I say 50? I meant 55, 60. It's got, clean upside potential, a little calm before the storm, a little lower volume in there, just kind of wait and see. But I think that's a pretty darn clean setup, and it'd be really easy to trigger that in. You'd put a buy stop above the resistance, put a sell stop market down below support on the candle low, and you could back it off a little bit if you wanted to hold that longer term instead of just a pure swing trade. If you wanted to take that more as a position trade, you might use a looser stop mechanism. You could also trail stops behind it if you wanted to do that more aggressively as a swing trader. It even has day trade potential where you could look for a trigger above that high and maybe a 1 ATR pop.
Well, let's say that we do trigger above the high, say around that 51 mark, 10% of the ATR plus the trigger point, if you're not already in here 2 days ago or whatever it might be. And you do trigger at 51, target 1 at 55, that gives your reward expectation as 4 points, right?
Yep.
Okay.
Right up there. Yep.
Target 2 at 60 puts a reward expectation at 9 points. So now in relative reference to where you would have a stop loss, Noah, how do you start to deconstruct reward to risk and whether or not it makes sense to you?
Well, let's take a quick measure of what I think the risk would be to the downside. So if I put a stop down there, you're risking about $2.70, maybe $3. So with the target 1, you're going to be shy of that 2-to-1 reward to risk ratio. You maybe 1.5 to 1.
Well, you don't need 2 to 1 on T1. I think there's
that's really common. For T2, you always want 2 to 1 or better. And that gives you actually better. That's closer to 3 to 1 reward. And that's exciting. I like that kind of a setup. So when you compare that risk reward, I mean, it's real simple to kind of visualize it. When you kind of put it like this, you'd say, okay, I'll put my entry price right here above the high. That's where I'll put my entry price. And then you say, okay, I'm going to go with the stop loss down here below that low. And that's your stop. And then for your target out there, I'd say, okay, well, hey, out at target 2, that we'll call that T2. You've got way better than a 3 to 1 reward to risk ratio. And I always just visually eyeball. I go, okay, well, if that's my risk, and that's my potential reward. I mean, it's definitely going to give you that real quick geometric. You can size it out, just ballpark it with your eyeballs. And then it really comes down to position size. Like, how much risk are you willing to take? one of the more common mistakes I see new traders make, Tim, is they position size for the reward they want. They think to themselves, oh, hey, Christmas is coming, got to get the kids the Xbox. I need a quick grand, whatever their motivation is. I'm just making one up right now. They want to buy for the reward side, when in reality they should say, okay, well, hey, if this hits my stop loss, that's also a probable outcome. I need to position size myself to the risk side of that. And, I'm just using good old step system methodologies right there. Whoops, I accidentally stopped sharing. I didn't mean to do that.
We got you.
But yeah, I'm just using step system methodologies right there, where I'm saying, okay, hey, we trigger above highs. We put stop losses down below lows. We always like technical barriers in there. We use the ATR as a measuring stick, and we use little, buffers to make sure we're getting enough confirmation, and we're putting our stop losses far enough below support zones that we're statistically sound. You don't want to put stop losses tighter than a 1 ATR move. Because the odds of that getting hit start to increase. That makes you into a day trader real quick if you're putting stop losses less than 1 ATR away. And if you can put it more than an ATR away and get it below a technical level, see what that gives you. If you break that down into an hourly chart, that's putting your stop loss down below the support zone established down here on
intraday support.
Monday. Yep, intraday support.
Okay.
And so the market would have to come down and take out the intraday support in order for it to then hit your stop loss. So that gives you a statistical edge, plus just trading with the trend and the momentum on that. It may take it a couple weeks to get out to that $60 target. Looking at its, kind of historical performance in there, this thing can run. It looks like it has a tendency to consolidate and then pop, consolidate, then pop, consolidate, then pop. And you're just coming off of a long consolidation pattern. And that pop it can get up and go. So I think, 55 is an easy target. 60 is really within what I would expect, a traditional forecasting model to get you out there. And you can also do things like this is one of my little cheats that I like to do. I like to go look at the option chain, say for January, and they're pricing in $6. So they're saying, yeah, we believe this thing can move up $6. So maybe I modify my target based off of what the implied volatility measure is. And, using a technical target that's purely technical, I might get myself a little. We were talking about this last night, Tim, in our little coaching mastermind group, where we're talking about price anchoring. Like if I get stuck on $60 in my head, I might end up basing my decisions off of that optimistic outlook, when in reality, maybe 56 is the more probable target. I've got to play devil's advocate on that. And maybe temper my expectations. I think a stop down below the low, $3 risk, potential target out at 56, 57, high probability. That's 2-1. If you get lucky on the trade and it plays out perfectly, you might see it run out towards that 60 ballpark. And it's done that in the past, post consolidation pattern. Whenever you get those squeezes, you look for a big momentum breakout.
Love it. And obviously, by the way, the STEP system, and if your team tackles, somebody in the chat, just type in STEP system. That's an acronym: stop loss, target, entry, position size. That's what Noah's discussing here as we're looking at DAR, stop loss at specific location. And you need to go back and you need to review all those rules, understand why Noah would go to an intraday time frame, put that below a certain ATR level. Love the analysis here, Noah. And then T1, T2 off of the entry point, reward to risk does kind of map itself out. Now, that being said, that's just a trade setup. Trading in general requires the mechanics of going through this process. Now, let's take a look at two from the option report. You can pick either one that you want. I'll give you a couple of choices here. Autodesk, which I'm interested, a little high base up here, looks like it wants to break, and even kind of testing that right now. Goldman Sachs, which is a pre-break. Why don't we take the Goldman analysis? Unless you love
no,
that.
I really like the Autodesk. We actually placed a little virtual trade on that in the lounge this morning, where we bought a long call and we set up a higher strike to sell to see if we can go into a risk-free trade on that. So I like that. It's clean break. You can probably still trade that. And then the other one with the symbol again was Goldman Sachs, right?
Goldman Sachs,
okay.
Yeah.
Pre-break. I like this. This has got that nice consolidation off the 9. You got a clean trigger out here above 239.85 high. You could use the 9 as a place to play, put stops down below the 9 as far as tight risk management goes. beautiful setup. I like the setup. Let me back it out to a weekly just to get a target perspective. I think 250 is an easy target. Not looking for too much out of that. And it possibly could take that out. So I think you got a $10 potential upside. And then you'd take a risk probably I'd probably use yesterday's high and yesterday's low for my stop. So that'd give me about $5 risk in that ballpark, maybe 550. So you're right on that 2-to-1 reward to risk ratio. And I think 250 is your first target. If it can take out 250,
give me some lines on this so we can see it visually.
Yeah, you bet.
What you did last time really helped. Yeah.
Yeah. So let me just throw that out this way here. Same thing. Entry right above the candlestick high. Mm-hmm. Stop loss down. I'd go yesterday's low and below the 9-period moving average, and then you're going to target 1. We'll call that T1. I think 260 is target 2. And again, risk reward ratio. You can clearly see 250 is just about 2-to-1. It's probably about 1.8 to 1.
So I got a question for you, kind of based on what Reagan's asking in the chat. Based on any kind of trade setup like this, if you're going to take this trade setup 100 times in the next year, right? How often do you think it's going to hit that 250 zone in a ballpark based on your experience? I mean, we're talking 60%, 50%, 40%. How do you assess that?
You have a statistical edge, and I think you want to make sure you're tempering that edge. I mean, you're trading with the trend. The trend is your friend. I would factor in a few other things, Tim. I'd ask myself, okay, well, what's the financial sector doing? I'd say, okay, a financial sector also has a nice bullish look to it. Mm-hmm. I might specifically say, well, show me what the banks are doing. And I can look at the bank index and get a good feel for that. And that's got the same look as Goldman Sachs. Might as well be the same chart. Mm-hmm. So I'm seeing the sector back up what I'm seeing on the chart. Well, that gives me a potential edge on the continuation of trend. Once it starts to break, I think part of it becomes mechanical, where people are buying because it broke, and it becomes a bit of a self-fulfilling prophecy. And I would say you probably, it's hard to put statistics on it, but that's got a bit of an ascending triangle pattern.
But it's not 100%.
No, but I've seen back testing results that show about 60-40 probabilities on ascending T1 triangle breaks. Yeah. As far as like hitting T1, that kind of comes down to, statistical probabilities, pay ranges, which would be historical estimates of how much it moves, implied volatility estimates on how much it moves. And then if the rest of the market is coming along with the breakout, like we've seen the NASDAQ, we've seen the S&P looking like they're breaking out. We've seen this financial sector looking like it could break out. If I were to get all those stars to align, the odds of probability start to increase, but I don't plan on the perfect outcome when I'm going into a trade. In fact, I plan every trade as though it's going to hit my stop. Mm-hmm. Because there's if I have a 60% probability of a break, that means I got a 40% probability of a failed breakout, mm-hmm. and that it may just hit my stop loss. So I always plan every trade and assume every trade could end up being an expense trade rather than an income trade. Rather than calling them winners and losers, I always like to frame it as a business proposition and say, okay, well, I'm willing to risk X number of dollars as a business expense to find out if I can get a return of Y number of dollars.
Mm-hmm, mm-hmm. And the thing is, I've looked at so many trading journals from students over the years. I also know, just talking to traders, in 15 years of my career, percent profitability on its own is a very misleading data point, quite frankly. You can be 70% profitable and have huge drawdowns because you mismanage money, right? You can be 50% profitable and have a smooth equity curve that is growing and hitting your financial targets every month because you managed risk better. So in my opinion, and Reagan, I would love to chat with you, maybe bring that discussion to me personally over in the Facebook page, something like that. That's a wonderful question, wonderful thought process. And really the answer is always going to come back to journaling, execution, and practice. So if you're a new trader, take the weekend reports, take these picks, go through the step system, learn how to do it, start in paper trade until you get enough data in your journal to start understanding some of these other layers of the numbers. I love your analysis here, Noah. I'll give you one last one, and this one's not from a report. I found some on Twitter. I'll give you a couple of choices. Either a breakout, Coach Frank had CREE, C-R-E-E,
Well, before I move on to Cree, I want to answer James's question in volume on Goldman Sachs.
Oh, sure. I didn't see it.
Volume is dipping a bit, and you're seeing that I've got a moving average on my volume. And so as it's consolidating, volumes dropped off. Part of that was last week, week back, you had Thanksgiving. And this is kind of just below typical volume as of late. And then today's partial volume. Anytime I'm looking at a breakout, I think volume tends to dip whenever there's a consolidation breakout setup. It's kind of that wait and see mentality where I'm willing to take a trade on this, but I want to see it break above the high. So this is pre-confirmation is the way Tim laid it out. And you're right. It is slowing down. So it very well could break down. That's why you wait for it to actually take out the high to confirm that it's breaking out. And the dip in volume is to be expected pre-breakout because everybody starts playing wait and see. It's like you go first, James. And if you buy and then it breaks out and everything goes okay, then I'll buy. And that's kind of how people wait and see is they just wait to see if other people buy and break the confirmation line for them. And then they all pile in, and you tend to see a big spike in volume on the breakout. Yeah. So I call it the calm before the storm. It gets quiet, and whichever way it breaks up or down, then people pile on.
Yeah, I want to jump on that too, Noah, because I agree with you 100%. When you see consolidation patterns such as ascending triangles, cup and handles, high bases, the participation lowers in those scenarios, and that is absolutely normal 100%. You don't, and so I actually see it as a positive thing, because if you see some consolidation with increasing volume, you're seeing battles happen, and you don't want to see those battles happen. You want to see people just kind of like not care, honestly. You want to, and kind of like James is indicating about 240 and what Noah is talking about, that's where volume comes in and plays a role in the analysis, is not within the consolidation, but when it breaks out of the consolidation. Seeing that increasing volume on the breakout of the consolidation is what you're waiting for. And so I think we're all of us are talking the exact same language, but for those of you that are new to the market, volume plays a very important role for us in terms of identifying participation rates, and it certainly plays a role in certain technical patterns. But when you're looking at consolidation, it is on the breakout that you want to see that increased participation rate.
Yep, absolutely.
Love the answers, guys. One last one here, Noah, just kind of change it up. I'll not even give you the choice. I'll just tell you which one I want you to analyze is Target, because it's the only retracement he had on Twitter today, and it's starting to develop. Wasn't on the reports last week.
He's just trolling me. That's all he's doing. That's all he's doing. He's trolling me.
I think that that's a Purdy setup.
I was the only one that vetoed Target in the scouting report meeting, and this is a troll, and Frank is a really good troll.
And it's a great troll if you think about it, because why were you vetoing that, Matt? Because it wasn't quite at the 20 yet. Now that it's at the 20, would you veto it now?
No, I don't think Target in recent history has a strong historical bullish retracement setup.
Fine, then I'm going to have to trade Walmart instead.
I like Walmart.
It's a decent pullback.
I didn't veto Walmart.
I simply I want you to analyze one of the retracements so you can
I like the Target retracement. From a weekly perspective, it's just a small, tiny little pullback, two candles. I like that. Crossing down below the 9 can be a deal breaker for some people. I have always liked between the 9 period exponential moving average and the 20 period moving average. I refer to that as a bull area. It's got a pretty orderly pullback. There's no crazy spikes in selling. The volume is pretty orderly down here. When you look at it, nothing crazy. The bottoms of the candles are getting a little bit closer. And so you're actually seeing 2 candle bottoms in the same neighborhood right here. That's a double bottom. You have an inside candle today. So today's candle on the inside. And so what that tells me is if I break it down into that hourly chart, I'm starting to see a potential bottom form and a potential reversal setup here. Maybe I drop it down into 30 minutes and you get more of that kind of rounding, double bottom type action in there, where yesterday's low and today's low are not too far off. You're seeing it move up to the inside. And I think there's upside potential for it, to break here. So I want to see it clear 174.30 ballpark on the intraday chart. On the daily chart, some traders would trigger above today's high. Other traders might wait for it to take out yesterday's high.
And that'd be personal rule preference.
That'd be personal rule preference. I'd be okay with a tighter trigger and then maybe a looser stop on this one. And really, all I'd be hoping for is a late phase Santa Claus rally, like that more textbook definition of that rally up to the week of Christmas. And maybe you see some of the retailers follow suit, like Walmart. But again, it's not the top performer. But it's a decent looking pullback pattern, and I do like the pullback. I like the recent momentum off of their earnings, and that momentum on that earnings announcement, and then the orderly pullback. I always like that. Good volume on the run up, lower volume on the pullback down, and more than anything, you can have a very low risk entry here. You don't have to have a big risk on that one. And then the upside potential, just even to resistance, is going to be 3-4 to 1 if you set that up right.
If my personal rule is that I got to get it to clear the 9 EMA, does it throw the reward risk dynamic off?
I think in this case it would. So if your rule was wait for the 9, then that might preclude you from taking the trade. Which there could be an argument for sticking with that rule. On this time,
can I give that argument? Is it my turn?
Yeah, sure.
Do I get a chance? All right. I vetoed for a couple of reasons. Number one, I talked about this earlier in the show today. You had post-election this as increasing momentum in a high base scenario with a potential breakout of 181. That was a very simple trade. It was consolidation. It felt that high base. It lost the pattern, which means now you don't have that type of V-shaped type analysis that swing traders love. You have a rounding top with a felt high base. That's number one. Number two, Target in recent history has not been a strong bullish retracement candidate. Look at the last two dips there. You didn't have 3 to 4 day type pullbacks coming into increasing momentum moving averages. You had a mixture of analysis with 9 EMAs crossing 20 EMAs. It's a cluster of all those moving averages. It fell to 9, it fell to 20, it came into the 50, it tested the 50, came under the 50. The analysis is completely all over the board on bullish retracements. That's number two. When you're looking at this from a pullback perspective, you can't tell me that in the last 3 months, this stock has cared one iota about the 20-period moving average. It's a random line on your chart that matters absolutely nothing to this stock. And so when you're looking at the failure of the high base, when you're looking at the failure of the support level, when you're looking at a cluster of moving averages not giving you any indication in any capacity, and because of the failed high base, you can't target above 181, which means unless you aggressively trigger on this bullish retracement above the intraday high today with an ATR of 3.94, you are not going to have the reward to risk ratio necessary to even justify that trade, which means it's not a swing trade, which means it got vetoed. So Frank's trolling didn't work.
Frankie.
That was the most patient I have ever been in rebuttal.
I'm with Frank.
First of all,
Who won? Who's okay? So we obviously have a difference. I kind of feel like I'm a little on an island on this target setup. I'm out. I vetoed. I gave you the reasons why. Team tackle, target.
This would be one of those.
Hold on. Team tackle. You love the retracement? Yes. Team tackle. If you agree with Coach Matt, no.
So a yes or no. And by the way, there's always a little lag. So as people answer that question, couple things. Number one, it's always a lot of fun doing our weekend report meeting. Frank is obviously an integral part of that. He does so much scanning. We had a webinar with him. He's a wonderful technician, wonderful scanner, but it's always a fun moment when we're in that meeting and we're going through picks and one gets vetoed. and you can just hear him just a little bit sad.
Listen, no, they always get emotionally. They always get upset, and they take it like they spent like 5 seconds scanning the market. And they're like, I am so emotionally invested in this pick, and why would the coaches not? And Frank is still not over the fact that I vetoed the target pick that he had to troll me on a random Tuesday.
And he always has the same line. All right, I'll keep it for Twitter.
I'll just keep it for Twitter.
All right.
Oh my goodness, I love
it. Seems like
so
one of those
much.
Put up or shut up moments. Like, yeah, show me your returns on it, Frank. When we're done.
Mix here, even from the halftime crew, even from our veterans. Looks like mix yeses and no's.
You got mixed. I got no, maybe a bull put, yes, and then Noah. Like, what are you talking?
I got a yes.
Dude, we don't need it. We don't need to call a commission to count these votes, bro. We're good.
Oh goodness. All right. Noah, by the way, this process of going through the detail of these setups, I mean, that really is what swing trading is all about, is looking at the numbers, specifically understanding trigger, entry, reward, risk. That's why,
everybody sees the picture a little bit different, Tim.
Yeah. Even the subtle differences, even little things like reward risk dynamics.
Noah,
you were looking, let me finish.
Yeah, go ahead.
Noah, you were looking at this and saying, I can take an aggressive trigger and have cheap risk. And the whole time I was thinking, I got to get that 9 EMA cleared. I'm more conservative with that retracement setup for this personally. And then once I do that, I'm running into resistance. And so then maybe the pattern needs time to develop. And that's just personal preference based on rules, right?
Well, and that's really what makes the market go round. I mean, you're going to have people who take the aggressive entry on that. You're going to have people who fade the market. I mean, there's already buyers in there somewhere. And, for me, if I'm thinking aggressively, I'm down here on a 5-minute chart and I'm just looking for a take out of the 5-minute high. And I might even consider that just a day trade to the 9-period moving average and be out before Tim's even thinking about getting in.
Yeah. Day trade analysis.
Yeah, sure. Absolutely. I mean, there's different levels of analysis. And I actually think, a trigger at 174 and a stop down, in the 171, you got 3 points risk. You could position size to a very comfortable small risk, amount. And find out if you can violate that 9-period moving average, which would put you at a very short-term target.
Easy answer. You can't. The votes are in. Keep talking. Doesn't matter.
All right. Well, okay. Whatever you say, boss.
It's not me. It's the votes.
Well, listen.
Check the halftime crew.
This ain't no democracy. That's all I got to say about that. I'm the king here.
I so badly want to make a joke right now, but I'm not going to.
I don't think I'm sorry. In 2020, no swing trader is looking at Target being like, I'm so excited for that $4 potential pop for a $3.94 potential risk.
It doesn't get you so excited. Doesn't get you too excited.
Literally, nobody's doing it.
Oh, goodness. All right, guys. And those are the ones I found there, Noah. By the way,
y'all keep dancing on your grave, though. It's fun. It's funny.
You do a lot of this kind of analysis daily whenever we're doing our shows, lounges, helping people understand setups, all that kind of stuff. And are you who's on the coach's show tonight? No, is that you tonight?
I was supposed to be on tonight, but I had an obligation pop up, so I got to go to that. So I don't know, but it's always great.
Yeah. All right. Well, that was a great pitch. I don't know, but it is always great. I do agree with that 100%. I love it when you are on there, get a chance to come in and teach technicals. Probably Tyler, and we'll hear from Mark about that at some point. 6:30 Mountain tonight, 8:30 Eastern tonight, Coach's show. Outside of that, guys, we are going to be dropping a podcast at some point here shortly. Trading Justice episode 402, just waiting on some back-end stuff on that. Matt, let's move into final thoughts here if we can, and let's start with you, sir.
No, you guys had the best final thoughts. I'm going to leave it at that.
Noah?
I stopped thinking a minute ago and I moved on. I'm sorry.
Yeah, I'm in just like conversation mode at this point.
Yeah.
Well, I am as well, which means we're going to wrap the actual halftime report, sit and chat a little bit. We got some
podcast, everybody. Trading Justice podcast, episode 402 with Pete Thomas being released here today. All things precious metals. We obviously do our market skyline piece over there in the podcast where we talk openly about the market that week. We then did the interview with Pete Thomas, and man, I don't have to say much about Pete. The community knows how awesome Pete is. So definitely enjoy Pete Thomas and all things metals in the feature. And then Mark, as has been customary in the last few months, has us play some very random game where we're getting to the point where we don't even understand the random nature of the games that Mark chooses any longer. So enjoy that one as well. But definitely give it. And if you guys like the podcast, you want to support the podcast, We don't charge for the podcast. We really don't do any advertisements on the podcast outside of Tackle Trading. It's just something we do for our community. So if you guys enjoy it, the best way to support the podcast is to go over to iTunes, give a 5-star review. That allows us to go compete with other podcasts. And dealing with digital media in a world of dealing with Apple and iTunes and Amazon, and competition is fierce out there, guys. So definitely help us out there if you don't mind.
Yeah, love that. As always, just an enjoyable thing to put together and get out there for you guys. Noah, thank you today. Thank you for joining us. We really appreciate it and love the way that you break down charts.
Very quickly.
Yep.
Facebook group, more and more people coming over there. We just launched that Facebook group just the other day. I think the tag is Team Tackle. So if you want to just search it there, but I'll put it on my Twitter account, MattJustice13. Seen a little bit of activity pick up in the Facebook group over there and starting to really enjoy it. So if you want to participate over there, remember, we only have a couple rules. Participate, have some fun, no politics, and zero negativity. Do not break the rules.
Absolutely. And I just did drop the link directly to that Facebook group. It is Facebook/groups Team Tackle. And I'm enjoying it. A lot of energy. By the way, we had a conversation yesterday in the halftime report. They took it to the Facebook group and continued it over their trade monitor setups and everything. Kind of cool there, guys. Appreciate it. All right, guys, we are done for today. Last thing I always do, if you're not yet a member of Tackle Trading, 15-day trial, go straight to the website, go to the store. It's all over the place, including a link just below the video that we do each and every day here. Come and join us, 15-day trial of our pro membership. We would love to have you. All right, guys, we're done. We'll see everybody tomorrow.